Hello everyone, this is Ahura. I will be with you with the global economic outlook in the week ahead, which is going to be the 42nd week of 2025. As always, let's first check what we had previous week and then we can go forward and check the week ahead. Previous week, it was not such a busy week, especially with the holidays in China and government shutdown in United States. We didn't have much data to watch. Still, we had some data. I mean, the data that couldn't. They were not the data we can say that they were market changing data, but central bank meeting in on Wednesday, if I don't mistake, in New Zealand. Yeah, New Zealand central bank meeting in New Zealand, RBNZ, which cut their rates by 50 basis point, much more than market expectation of 25 basis point. The main reason, as mentioned earlier during the week, it was because of weaker than expected economic growth in New Zealand, especially with the weaker export to the China. You know that the Chinese import, if you follow the Chinese import data, you could see that Chinese import fell sharply, and one of the countries that they're exporting too much data, too much goods to the China is New Zealand, the same as Australia as well. So with the lower imports in China, we can understand that exporting in countries like Australia and New Zealand's falling sharply. That can affect New Zealand economy, which ended with more than expected rates cut to support the ongoing weakened economies. In Japan, finally, we had a new prime minister with the new president. Sorry, no, the prime minister. Sorry, Miss Takishi or Takaichi. So she was mostly about the hawkish policies and support the idea of more supporting of the Japanese economy. With the data that we had overall in Japan, including the labor market data, the idea that the Japanese economy still need to support is get much more interested in the markets, and market now counting more on holding the current rate for a little bit longer. That supported the Japanese stock markets also to print a new all-time high. In United States, mortgage rates fell slightly from 6.46 to 6.43, but it didn't help the mortgage markets. We saw that the application is still lowering. That does people are not so much so much interested into buy the new mortgage. That means that the market can get slightly more pressure, especially in the housing market. While we didn't have too much other data from the labor market and some other markets, we couldn't understand what exactly going on in the market in the United States. But still, in the energy market, we had EIA short-term energy outlook and also the weekly reports. Weekly API and EIA reports showed that the U.S. inventories for the oil increased, but gasoline inventories fell by more than 1,600,000 barrels. On the other hand, the EIA short-term energy outlook also showed that market now counting on the list. In the previous report, what we could see in EIA short-term energy outlook, it was that they are waiting. The market was expecting about $4 per price for the gas, but with the inventories that we had, with the higher inventories that we had during these 2 weeks, last 2 weeks, now the market expecting slightly less less price for gas, around less than $4 for this year, and maybe around between 38 cents, $3.80 and $4 with the higher inventories that you're expecting. At the last day of the market, when the Chinese holidays just ended, the market got another shot from Mr. Trump, mentioning about the new tariffs against the Chinese product that caused the market shortfall at the just like last hours of trading day on Friday. We have to wait and see what's going on Monday and how these two economies, going to react to each other against these new tariffs. Week ahead on Monday, we're going to start with the holiday in the United States, while the government offices mostly are closed, but still the stock markets are open. But generally, the market will be like we have less liquidity in Argentina, Israel, and Canada. Also, we're going to have the Thanksgiving Day and the national days, which is also in the Japan, which is going to be the holiday. So we're going to have the less the liquidity in market on Monday. Be careful about that. Monday it's gonna be the Chinese day where we're gonna have the import, export, and trade data from China. Generally, we're expecting slightly better export and import data from the China, as we can say that the Chinese economy, after short term of pressure, now is getting slightly better. Maybe we can have the better reaction in the market. So the Chinese economy is expected to have better economic data from the Chinese economy. We expect to have a better data on Monday. Later on Monday, we're going to have the OPEC monthly report as well. This OPEC monthly report is very important in the energy market, as you know, because usually in the monthly report, OPEC monthly report, we have much more detailed data about the economy, about the economic growth, about the oil production, and generally these data can support the idea of the better analyzing of the market. So to follow the OPEC monthly report, don't forget to read that. While the energy market generally is expecting to get more heated in the rest of this year, mostly because of the geopolitical tensions in one hand, and on the other hand, with the weaker economic growth. This monthly reports, including the OPEC monthly report, IEA and EIA monthly reports, they will be very, very important to be followed. While the government shutdown still continues in the United States, we have much more other concerns data and the news from USA, mostly because now the President Trump is threatening to cut off so many government jobs, as he promised to Democrats last week that if they do not agree with his budget plans, he's going to cut off the jobs in the United States, and that can affect the market as well. If President Trump cut the jobs, there are the reports that around 4,000 government employees, they already received this letter that after they get back after when they are getting back to their job after government shutdown, they will be fired. So let's see, and let's wait and see. But generally these data and these reactions in the market also can increase the market risk in the United States as well. We should follow these data as well. On Tuesday, it's going to be the Australian day, where Australian Central Bank going to have the interest rates RBA meeting. Reserve Bank of Australia meeting minutes. We're gonna have the meeting minutes, but we're gonna have the meeting minutes in Australia. Sorry, the minutes of the meeting of 2 weeks ago. But we will have too many other data from Australia. Somehow it is Australia and British Day. Business confidence will be very important in Australia after the current data, which they are showing that the Australian economy is moving much weaker. Moving forward much weaker and slower compared with 2-3 months ago. That can support the idea of another rate cut in Australia, as the Central Bank of New Zealand also cut the rates. Australian Central Bank also will continue to cut the rates if the data they miss the expectations. In United Kingdom, we're going to have the labor market data, which is very important. We will have two important data in the week ahead from United Kingdom. One of them is this labor market data, another one is the GDP. We will talk about that. We expect to see the unemployment rate to stay unchanged around 4.7 or maybe even 4.8%, but average earnings, including the bonuses and excluding bonuses, both of them, they're supposed to stay unchanged at around 4.7% and 4.8%. Generally, the data with not surprising in the data, while we don't have a surprise, we are not expecting a surprise in the data. It's not a good idea. It's not a good sign, actually. Not the idea. It's not a good sign, because the current data, they are weak, and if we don't have a surprise in the data, it means that we don't have a surprise in a weak data we have. Inflation numbers in Germany supposed to show that the inflation is slightly increasing, slightly more than I guess in July, in September. with 2.4% CPI annually, slightly more than 2.2%. With the monthly growth of 0.2%. That shows that I mean, I haven't thought that's slightly higher than central bank target, but 2.2%, 2.4% with the current market condition, it's not such a bad idea. I mean, such bad data, because as mentioned earlier several times, I mentioned about that the weaker inflation in European countries is mostly because of the lower demand. And if you see that the inflation is slightly increasing, it can even be some good news, that it means that finally the people and the consumers started spending money, and that can support the inflation. So especially with 2.2%, 2.4% is not the number that we can be worried about. Again, we're going to have the IEA report as well, same as mentioned as for OPEC report. Don't forget to follow the IEA report as well. It's going to be it can give us the much more idea about the energy market, the overall expectations of the production and market demand. Chinese data also will be very important on Tuesday, where we're going to have Tuesday or Wednesday, during the week generally, the Tuesday and Wednesday generally, the Chinese data will be very, very important, because especially the loan, I mean, the economic data of which you're showing that the Chinese loan numbers on Tuesday. The loans in China, the new loans and outstanding loans. The Chinese central bank and the government recently, they're supporting the idea of lowering the reserve ratio requirement, or to support the more loans, and by this way to support the economies and the businesses. So with this data, we can understand how the businesses are positive about the economic growth, how they are thinking about the economic growth, and if they get the more loans, it means that you're positive about the economy and economic growth and expectations, which can support the idea of better economic outlooks. Generally, we expect to see slightly better than expected compared with the previous month, better data in China compared with the previous month, not just in loans, but generally in economic data that we are expecting to see. Inflation numbers will be from different economies. And again, on Wednesday, we're going to have the inflation numbers from China as well, where again, same as the trade data, same as labor market data, we are expecting to see same as the loan numbers. We expect to see slightly better inflation growth as well. We expect to see the Chinese inflation to slightly increased by 0.2% on a monthly base, better than flat number that we had previous month, and annually it will probably fall by 0.1%, much better than 0.4% fall that we had previous month. Producer price index also, which fell by 2.9% previous month, in September is expected to fall by 2.3%, which is again somehow can be the positive number for the Chinese economy. In Japan also, we're going to later from Japan, we're going to have more data such as capacity utilization and industrial production. We are not so much positive about both of them, not for capacity utilization or for industrial production. Probably the Japanese data during this week can be, unlike the Chinese positive, unlike the positive idea that we are, positive expectations that we have from the China, about the Japanese data, we are not too much positive during the week. And it can probably support the idea of holding the current rate and not increasing the rates so fastly and rapidly. Another important data that we should watch about the inflation numbers, while it shows that in economic calendar from United States, but we are not going to have it. Already it's announced that inflation numbers, US inflation numbers will be published on October 24th. Yeah, these are the most from the Australia, the labor market, the data also from the Australia will be published on Friday, where we expect to see unemployment rate to stay unchanged around 4.2%, or probably increase to 4.3%. Don't forget about that. And finally, in United Kingdom, GDP numbers on Friday about the monthly GDP growth. It's expected to show us slightly positive data. We know that the GDP has been missing the expectations in last 2-3 months. For August, that we expect to see slightly better and slightly improvement in economic growth, which shows that while we should still be worried about the economic growth, but there are the signs that the UK or British economy is somehow trying to be a better. And also, on the other hand, we know the British Central Bank, or BOE, already mentioned that after that, you're expecting to see the inflation at 4% in September. In October and November, you expect to see that the inflation slightly starting to slow down, which means that the central bank will have rooms to cut the rates. So with these numbers, we should be worried about the UK economy, but if especially inflation has started to slowing down, then we can say that, okay, it's the turning point probably in the UK economy. On the 3 months changes, we expect to see only 0.2% growth, but still it is somehow a positive. Trade data, export, import, and all of these numbers also supposed to show slight improvement. I mean, it's not going to be a very good improvement, but slight improvement. Labor market, unemployment, and jobless claims, and all of them, they should be probably we wouldn't have if the government shutdown still continues. Yeah, this is the most important data we're gonna have from the economic calendar in the week ahead. Everything is depend. I mean, from U.S. economy, all of them it's depend on the government shutdown fate. Will that continue or not? That's very important to understand. If the government shutdowns ends, then we can have some more data to watch. Otherwise, the data will be very limited, and the market react to the guessing data and speeches that we're gonna have during the week. We're gonna have too many speeches as well from the central banks, especially United States Federal Reserve central banks. We're gonna have too many speeches. We should follow them while we don't have any other economic data to follow. These speeches will be very important. Market risk at 22, VIX moved to 22 on Friday, which caused the shortfall in the stock markets as well. Currently, we can say that with the market risk is such a higher levels, we can expect this safe havens to get more demand, including the dollar index. The dollar index, despite slight falling on Friday, but still it's positive, and now at 98.50, just compared with the 96 that we had just like 2-3 weeks ago. At 98.50 and around 99, the dollar index is still positive, and with the positive dollar index, the gold trading above 4,000 US dollar, and still can continue higher with the higher risk in the market. We have to wait on Monday and Tuesday and see how the China is going to react to the Mr. Trump's tweet about the new tariffs. Energy market affected negatively after this treatment, as these trades can affect directly the economic growth and the demand and the energy demand, which is for sure just like affecting the negatively in the stock in energy market. We should add this that the U.S. inventory is also increased for gas and oil. That can also be the negative idea and continuing the overall downtrend that we had since beginning of April, from August, sorry. From beginning of August that we had this slight downtrend that can continue. It's continued that $60 going to be our important pivot level. If the price held under $60, can continue lower. The covering above $60 also cannot change the market condition, but generally between 62 and 63, between 61 and 63 can be. If the price gets back above $60, between 61 and 63 can be the short-term outlook for the week ahead. And the stock markets, with the S&P 500, Dow Jones, and Nasdaq and Dow Jones falling sharply on Friday, we expect to see the downtrend to continue as the market risk is high in one hand. In other hand, we can see that generally the market now is asking the question how the AI stocks can move the markets forward. Don't forget that this week we're going to have the earnings reports as well, especially the bankings and financial sector. The banks, the important banks like the Citigroup, Wells Fargo, Bank of America, and all these main and important banks going to publish the earnings. With the rates that we have, probably we will have the positive reports from the banking sector. But in the next week, the week after that, even in the next 10 days, we will have more earnings from the industrial companies, from the tech companies, and they're going to tell us much more us much more about the economic growth and economic condition. We have to wait and see, but generally the markets is somehow the positive about the third quarter earnings reports that may slow down this downtrend that started, but generally I don't think that it can change the market condition. The same downtrend which started in the stock markets continued in the cryptocurrencies market as well, falling under 118,000, put the 111,000 in the spotlights. 111,000, actually slightly above that, 113,000. We can say that it is the pivot points. Falling under 113, 111 between these areas can change the market condition towards 109 and 100, then $9,740,000 for the next steps. Generally, the market shape is the negative and down, moving towards lower prices. That was the market condition and our economic expectations for the week ahead. During the week, with the more data from the US, if the government shutdowns ends, we can have a better idea of the market movements and economic growth. Have a good time. Bye-bye.